to another video from Q1of5 Solutions. You're currently watching a support video for the British International Distance College Accounting module. We offer private tutoring. Please visit the website for more information to help you, and you can consider following us on Instagram and Twitter, and keep watching our YouTube channel for more support. A quick third-party disclaimer: the material in this video is based on information, products or services by third parties. Third-party materials comprise of the products and opinions expressed by their owners. As such, I do not assume responsibility or liability for any third-party materials or opinions. I cannot guarantee the accuracy of the information contained in the third-party material. Presentation of such third-party material is simply used as a tool for assisting viewers with answering questions for educational purposes. All trademarks appearing in this guide are the property of their respective owners. In the IGCSE Accounting Assignment Pack, one of the rules states that all resources may be used when answering assignments, including textbooks, the internet, tutors, etc. Q1of5 Solutions is a private institution and is no way connected to the British International Distance College, BIDC. Any reference made to the subject material refer to official BIDC material, and we do not represent them as our own. We simply work through BIDC material with students as a means of additional academic support. A few tips on the road to success: try pre-read the chapters before doing the assignment questions as practice. Make notes about key concepts and theory to help you study. It's always a good idea to do additional reading and to practice. Practical application is very important, and that's why I'm encouraging you to do as many questions as possible. The more questions you do, the easier accounting gets. If you do consider creating a study or discussion group, that can also help you with studying and preparing for your assignments and your exams. If you would like to contact us, DM us on Instagram or tweet us at Q1of5_S. You may even want to leave a comment on our YouTube channel. You can also find more contact information on our website www.creativosolutions.com. Let's begin. We're going to be looking at the British International Distance College Accounting Assignment 2. This video is to help support you with answering the questions that you are required to submit. You would have received the assignment pack from the British International Distance College, and we're going to be looking at page 34. I'm focusing on assignment 2, which is out of 90 marks, and I'm going to be looking at question 1 first. Andy Miller is a wholesaler. He supplies goods on credit to Sam. So just to revise a little bit of theory, we've got two individuals here, Andy and Sam. That's what we've read in the actual information. We know Andy is a wholesaler, so he's the one buying in bulk. He supplies goods on credit to Sam. So from a relationship point of view, Andy is supplying Sam. Andy would be the business and Sam would be the customer. He supplies goods on credit to Sam, who has a general retail store. So we have a wholesaler and we have a retailer. Sam's account in Andy's ledger is shown below. So now we've got Sam's account in whose books? Andy's books. So whose perspective are we looking at? Andy. Andy is the business owner that we're going to be considering, and Sam is the customer. Question A says, calculate the balance on Sam's account on 28 March and enter the amount in the appropriate column above. Again, I'm looking at Andy's business, and Andy's business will have an account for Sam. Sam's account looks as follows. We're going to have to complete a working in order to get the missing amounts. Credit and a balance. I want to discuss each line item just so you're familiar with what's happening in the question. We're obviously looking at the month of March, So on the 1st of March, there's a balance in Sam's account, and the balance is stated as 1,000. Then on the 4th of March, there's sales that occur between Andy and Sam. So as the customer, as the retailer going to the wholesaler, Sam has purchased something from Andy. Whose perspective are we looking at? Andy. So this entire account relates to Andy's business. Andy has sold something to Sam, and the sales amount to 450. So the total after that sale is obviously the balance plus what was debited to Sam's account. What is Sam to the business? Well, Sam would be considered a debtor or part of the trade receivables of the business. If you don't know what a debtor is or a trade receivable, we do have videos on the website to help you. Consider watching one of those that will then explain exactly what the rules are around how to interpret and understand what debtors represents. Debtors we would then highlight as being an asset, something that Andy will value in terms of being a resource. Then on the 10th, there are returns, and the returns amount to 50. So the balance would then be 1,400. On the 21st, there's details here, bank, and it is a credit of 975. So when would you have a credit in this account? Well, when a customer is trying to settle their outstanding account with you as the business. In this case, Sam is actually paying Andy, so from Andy's point of view, it's seen as a receipt. But if I'm looking at the debtor's account, because Sam is a debtor, the debtor's account will be decreasing, and therefore there's a 975 that's going to be taken off Sam's account. And there's also a discount as well, so we need to include that. And the discount was 25. So we actually need to subtract a discount of 25, which gives us a final balance here of 400. Then on the 28th, more sales occur. And if there's more sales, that's going to increase Sam's account. So the question said, calculate the balance on Sam's account on 28 March and enter the amount in the appropriate column above. So the answer for A would be 700. The balance plus the additional sales. 700 would be the balance that would be in Sam's account on the 28th of March. So question 1A's answer would be 700. Question 1B says, state whether Sam was a trade receivable or trade payable of Andy Miller's on 28th March. If I'm looking at that point in time, does Sam have a positive balance? Yes. Sam is considered a debtor who has an outstanding account. So Sam is a debtor who still owes Andy. Therefore, Andy's business, or Andy's, what was Andy's company? Andy Miller. Okay, Andy Miller will view Sam as a trade receivable. It meets the definition of an asset. Again, I would revise and I would identify what the definitions are for each of these different accounts. We're obviously looking at the asset account. So just to recap the theory for some of you who haven't covered the theory. We do have videos to help you regarding that. Just remember, an asset is a resource that's controlled by the business that will give rise to future economic benefits. Sam is a customer who has bought on credit. From Andy's perspective, that's a credit sale. Therefore, Sam would be considered a debtor, being part of the trade receivables of the business. Question 1C. Andy keeps a sales ledger and a purchase ledger. State in which of these ledgers Sam's account would appear. Again, simple, easy question for you to consider. All you need to do is identify what they are to the business. Well, Sam is a debtor. He's a customer with an outstanding amount. We know that debtors arise when there are credit sales. So the sales journal / sales ledger will record all of the credit sales. Question 1D, there are two parts here. Question D says, the table below shows 3 entries from Sam's account. Complete the table to show for each entry, number 1, the name of the business document on which the entry in Sam's ledger is based, and number 2, the name of the person, Andy or Sam, who sent the document. So let's complete that. We're looking at 2 things here. Let's write in the columns that they've given you here. Transaction, day 4, day 10, and day 21. We've got the business document and name of the person sending it. Okay, name of the sender. So let's go back and look at each of these transactions. They want us to identify what's happening here with the sales, then the sales return, and then the bank. Sales returns bank. So those are the 3 different transactions they want you to consider, and they want to know what the business document is. Okay, the business document would be the source document that we would have that would represent the transaction that has occurred between Andy and Sam. The name of the sender is the person creating that document. So if I'm looking at the 4th, we know there's a sale. If there's a sale, the business will be selling to Sam. So the business document would be a duplicate sales invoice, or a duplicate sales credit sale invoice. Let's write the whole thing, credit sales invoice. That would be the source document that would be utilized in this particular transaction. So when looking at the business, everything is always from the business point of view. So when focusing on a sale, the business is going to issue the original sales invoice to the customer, in this case Sam, and Andy would keep the duplicate credit sales invoice. It could be a tax invoice if Andy's a registered business for tax purposes. We'll keep it as duplicate credit sales invoice. The name of the sender, well, the name of the person sending the document, well, Andy would be the one sending that document to Sam, because he's creating the original and he's keeping the duplicate. If I have a sales return, again, there's 2 ways of looking at this. The business could be the one creating a source document representing the return between the business and the customer, or the customer could actually come to the business and give them a source document that they've prepared. There's 2 ways of looking at this, because we've got debit notes and we've got credit notes. I'm just going to keep it simple and take everything from the business point of view, because we'll assume that the business is the one that has all the proper accounting records in terms of their accounting system in place, and they'd be capable of creating those source documents. Not all retailers would be able to provide that information unless they also have a very sophisticated system in place. So I'm going to assume everything from Andy's perspective, because this question was looking at everything from Andy's perspective. So if I'm focusing on a sales return, again, Andy is going to be creating a transaction in Andy's books. And if I'm looking at the return on the 10th, the clue is actually in the question. If you look at this, you can see that they've credited Sam's account. So if they're crediting Sam's account, they're going to be using a credit note. So they're going to have to issue the original and keep the duplicate. So again, duplicate credit notes. It's a duplicate because the original always gets given to the customer, and it's a credit note because we're reducing Sam's account and Sam is a debt to the business. Person sending the document would be Andy. Okay, name of person sending the document, that's the title for that heading. So that's the first two. The final transaction is for the bank. We spoke about this over here. We know there was a payment made by Sam to the business. So from Andy's point of view, it's seen as a receipt. They should have given more information in the question regarding how did you increase bank. Was this due to an EFT? If it was electronic file transfer, funds transfer, sorry, EFT, electronic funds transfer, the funds would have directly reflected in Andy's account. So if that's the case, the source document would be a bank statement. We don't know what actually happened here. Did Sam come to the business and pay cash? If Sam paid cash to Andy, Andy would then be issuing a receipt for that particular payment. And there's also a discount applicable here. So looking at the information given in the question, if this was a EFT, so a direct transfer from Sam's account to Andy, well, Sam wouldn't have known of a possible discount unless he knew the terms and conditions of the contract. So we're not going to assume that. I'm going to assume that because it's bank, Sam has come and paid cash to the business, which the business ultimately has recorded in the bank account, okay, because it's going to affect their cash receipts. So I'm going to write duplicate receipt here because the original will be given to the customer. Brackets, I'll say this is a cash payment, so duplicate receipts. You could have said or bank statement if this was a direct transfer, which is a EFT. So again, two different ways of looking at this. The name of the sender, well, the duplicate receipt will be sending the document to Sam. If it was a bank statement, well, you're not going to send Sam your bank statement. Okay, you're going to keep it for internal records. Because you've received the actual income in the form of cash, you could also issue a receipt, even if it reflected directly on your bank statement. A receipt would just acknowledge that you received an amount from Sam. So again, in terms of who's sending the document, Andy would be the one responsible for sending the original to Sam, and they would keep the duplicate for their records for recording that in their accounting books. And that concludes question number 1.